So today we will start where we have left last time. So today is the 13th September. Slide deck in right. Okay. Right. Right. So we will continue where we have stopped last Sunday. That is on 6th September. Right. So we'll just recapitulations of the previous class what we have learned. So we discussed last week what is marketed, right? We started, in fact, the marketing lectures, the final episode or the final sections of the syllabus of financial clients management. Last time we started the marketing, so we discussed what is marketed, right? So we discuss anything in the world you can market, from event, financial products, services, then events, then ideas, places, things, anything you can market it. We discuss that part, and then we discuss the definitions of marketing. So I told you there are so many definitions is marketing, and we basically concentrated on the definitions given by the Philip Kotler and Armstrong, and basically the Chartered Institute of Marketing. That is the body, a chartered body in UK. They also define marketing. So what they say about the marketing is it is a management process identifying and anticipating customer requirements profitably in a socially acceptable manner, right? So we discuss the definitions of marketing, right? And then we discuss why marketing is critical in serving the organizational objective, specific reference to financial organization. Why marketing is important for financial organization. If not, so their market share is coming down. So what are the action you need to take, right? Then we discuss the key core concept of marketing, that is basically the backdrop of marketing or principal elements, that mean needs, wants, and demands, right? We discuss need is a human basic requirement. Wants is how we're going to satisfy your need and wants. Demand mean so you have a purchasing power to purchase this good, and also the demand is willingness. So if these three things are not there, marketing won't take place. That is the first core concept. What is need, want, and demand? So then after that we discuss, in order to satisfy your need and want, what do you need? You need product or services. So what do you mean by a product? Product is anything you can offer to your market to satisfy and use consumption by the customer in order to satisfy their needs and wants. So therefore, another key concept of core concept of marketing is product and services. So now you have a money, you have a need, you have a want, you have a willingness. Now products and services are available. Are you going to purchase every type of product? Before you are going to purchase a product, but you look at it, you basically look at it, the satisfaction you are generating after consuming this product, and the value and the quality. So you look at it, those three important aspects before you consume or purchase a product. So those are three another key core concept of marketing, mean value, satisfaction, and the quality before you buy a particular product. Another core concept. Now we have learned three core concepts. And then the moment you satisfy, moment you find the product is good value to you and it's give you a better quality product, so then what happens? You are going to exchange. You're going to exchange process. You start with the exchange process. That means you give money and take the goods. So then the moment you give your financial money, financial terms become a transaction. Keep on buying your products. We call this relationship. Then what is the next core concept is exchange, transaction, relationship. Right? Those are the three things. Now those are four things. Now everything is taking place where? So where the buyers or sellers are meeting. So that is what you call the market. So without having a market, without having a financial market, no financial transactions, no banking is taking place. So order to in order to create marketing, apply marketing, you need to have fulfill these core concepts. What are these? Needs, wants, and demand. Then product and services, value, satisfaction and quality, exchange, transaction, relationship, and the market. So those are we call them as core concept. We discussed those things in detail last week, right? Last Sunday. And then we discussed five competing concepts that mean how marketing evolved to today's concept, right? So there, of course, we discussed the first concept is the production era, or sometimes we call production orientation. What are the characteristics of production orientation? Demand is more than supply, and product is available at affordable price. So then anything you produce, people will buy. That is a production concept. And from production concept, we move into product concept. What we have done it, we change the product features of that particular product. So then again the demand is more, supply is less, so therefore people continue to buy. From production to product, and then we move into selling concept. There, of course, demand is now too many people are supplying the good. Supply is more than demand. Now, in order to convince the customers to purchase, you need to do a lot of promotion activities, lot of personal selling you need to do, right? And still you are trying to pressurize to customers to buy. So that is what you call the selling concept. And the fourth concept, from the selling we move into the marketing concept. So and the marketing concept, what we have discussed, first time we identify what the customers want, and then try to develop a product in order to fulfill the customer's needs and wants. So that is how the marketing concept evolved, right? So then we discuss the difference between selling concept and marketing concept. So we have a definition, right? So how selling concept try to earn profit through selling number of units, but in marketing, how we are going to improve our business by satisfying the customer, right? We look at it what the customer wants and develop the product. Of course, the selling, what we have done here, we have a product. We are trying to push the customer to purchase. And then from marketing, then after that, not only we need to look at the customer satisfaction, but we need to look at the society. And then from marketing concept, it is evolved the societal marketing concept. We need to satisfy customers, we need to satisfy organization as well as the society. So that is societal marketing concept. Now what we are talking about today is the holistic marketing concept, right? Not only we need to satisfy the organization, and we need to satisfy the customers, and we need to do something social responsible to the society as well as our internal people. So within the modern concept in marketing, we call holistic marketing approach, where we discuss relationship marketing, social responsibility marketing, internal marketing, and integrated marketing. So all things we have discussed last week, right? Last Sunday. And then we discuss why some customers are moving away from our bank. What are the reasons? And also we see how we are going to retain them, and then we discuss in detail. And getting new customers is very costly, so therefore every bank is trying to keep your existing customer with the bank, because those customers give you more benefits, more profits to your organization, right? Okay, and then we discuss the most important concept, we call a marketing mix concept. So then we discuss what are the ingredient comes under marketing mix. right? Now there may be a lot of marketing mix variables are coming, and we discuss the marketing mix variables. So we discuss there are two type of variables affect any organization. One is controllable variable, other one is uncontrollable variable. What are uncontrollable variable? We discuss in detail. Those are pestle factors, political, economic, social, cultural, where organization cannot control. So we need to live with that, right? So controllable variable, we call them as marketing mix variable. We use these controllable variable, or what you call the marketing mix variable, to deal with those external uncontrollable variables, right? How you use it, these marketing mix element. So what is marketing mix elements are we call 7 P's very famously: product, price, promotion, place. And because of the we are involving in services business, we add another three element into the marketing mix. We call that is people, process, and physical evidence. So we discuss in length what are why marketing mix is important, right? And how we use the marketing mix in a given situation, right? So those things we discussed last time, right, in details. Then we start to discuss the one of the marketing mix element, and that is what you call product element. So we took one element of the marketing mix, product, and then we discuss what is product. Product is a co-concept, element of a co-concept, right? Without products, no marketing is taking place, right? And then we discuss what is product. And product is anything you can offer to a market, right? To attention, attraction, use, or consumption by an customer in order to fulfill his needs and wants. So that is, we discuss definitions about product. And then we discuss what are the key factors in products, or what are the features of a product. There we discuss some size, color, the packaging, the brand name, after sale service, all things we discuss. Now, before when you come up with the products, what are the other things associated with the product? Maybe wrapping or branding, after sale service, right? Some features, special features, and all things comes under key factors in products. We discuss that also. And then we discuss the level of products. In your case, this three level is okay, but in when you go for little deeper, there may be a 5 level of products. But in your case, there are 3 level products, right? First level is the first one. Can you remember the core benefits? Why you are using this product? Take for an example, mobile phone. Take for example, the savings product. What is the core benefits of core product? Is giving interest for mobile telephone communication. This the next layer we call them as actual product, right? What are the things associated with the mobile phone? Now, what are the products associated with the mobile? That layer, the second layer, we call, right? Sometimes, most of the time, is camera is there, CLI facilities, brand names, all things are there in the second layer. The third layer, we are keep on adding value. So that is third layer. We call them as augmented layer. Third level, we call them as augmented layer, where organizations are keep on adding some value to that layer. Thus, after some time, what happened, right? If everybody is giving that facility, it become what? Actual product, right? Augmented, you make the difference, your product with another product. So those are the things what we have discussed in last times. And also we discuss reason for introducing new products. So as you know, every organization need to introduce new product. We will discuss why we need to introduce new products in details now. Now, say for an example, If you say, for example, why you need to develop a new product, right? A new product made rapid changes is customer needs, changes of customer needs. Why customers are changed and need change? Because customers become more educated, more sophisticated, and their income is increased. Therefore, they are going for a new type of product. But sometimes there are certain product in the maturity stage in the market. So likewise, because of the long-term survival of the organization, you need products. Because of the technological changes, because of the competition, and to diversify your risk. So these are some of the reasons why you need to introduce new products. So that's we discuss. And when we discussing new products, and when we are developing a new products, and we discuss what are the factors we need to look at it, right? Whether how the new product is fitting to our organization culture, and whether we have done a research and development very correctly, whether these new products will fitting to the external environment, right? Are there any differentiation you feel it, customer to feel it, and also there may be a regulatory direction. So whatever the, especially the financial product, you can't just introduce. So it has to be falling in line with regulatory direction issued by central bank, and also not to mislead the public. The product you are developing cannot mislead the public, right? And it is technically and legally should be feasible. So there are so many factors you need to take into account, so before you develop a new product. So those are the things what we have discussed last week. I hope you got some points. Right, now we are going to discuss today the process of new product. Now we discuss why new products. When you are developing a new what product, what factors you need to look at it. Now we are going to discuss today the process of new product development. The process of new product development, right? But don't worry, in that I will put something. Now remember, this is in your handout, right? Now new product development process is a series of activities, right? Series of activities. Remember, usually for your organization, your bank, sometimes you may have a separate um, uh, committee, or maybe have a separate division, some organization, to develop new product. But why? And you remember, the new product development is a very costly, right? It is very costly. A lot of new products are failed. So therefore, developing a new product play an important role in an organization. Right? Now we'll discuss this new product development process with the help of some product. Now say for an example, now you joined X Bank. That's a newly, for example, newly established bank in Sri Lanka. You was given as a marketing manager in that particular bank, the posting at marketing manager. Now you have done financial science management subject, and the management will ask you, okay, so X Bank, we need to develop a new children savings account. We need to develop a new children savings account. That's a new product as far as X Bank is concerned. And you are requested to develop this new product. Now that what we going to discuss with an example, children's savings account. Clear now? Now how we are going to handle this new product development process with an example. You are requested to develop new product for your bank, especially for children's savings account. Right. What is the first step? The first step we call idea generation. Idea generation. First step is we call idea generation. Now you need to get some ideas for developing a new product. What are the new features we need to incorporate? What are the special value we are going to develop? All things you need to collect. So how can you get this information? There are two ways you can get this information: from inside and outside, within your own organization or with outside the organization. Now, sometimes inside you can ask from your employees, okay, we are going to develop a new product for children. Please send us your value ideas, right? Something like that. You send internet mail, and you can have a also some competition. You give some money when you come up with a good idea, and also you're going to look at it outside. Now, how can you outside? You see, in Sri Lankan banks, how many banks in Sri Lanka? Around 25, 26 odd banks in Sri Lanka, right? All banks are basically saving children's savings account. Now, what you need to do, collect all the competitors, banks, children's savings accounts information. What are their features? What are their benefits? So you can see right now you have an idea, and that's another one too. And also you can do some research. You can do some research. You go to the primary target market. Who are the primary target market for children's savings account? Is the children. You can go and ask from children. We are going to come up with a new product, children's savings account. What do you like? What do you want from the children's savings account? Like, the secondary group is parents, the children's parents. They are the people who basically take the decision, no? But you can get the idea from parents. Okay, we are going to, our new bank is going to introduce a new children's savings account. What you expecting from a children's savings account? What do you want? You collect all the information. And also you can ask from your employees, your branch managers, your sales team, or you may have some brainstorming session. You call some people and ask to discuss and come up with new ideas. Right? This is how idea generation step involved. Right now, first step for the new product development is idea generation. Right now, you can collect ideas from internally as well as externally. Now you have a full of ideas. Now, right, I'm just telling you example. Okay, now there are so many ideas. Now you have written down all the ideas while going through the competitors, collecting information from your employees, do some research. You have a lot of information. What sort of requirement request by the customers, target group, and then you cannot apply all these ideas now, right? So you cannot implement all the ideas generated at the idea generation stage. So then what happened? So you need to basically you need to select the best idea out of many ideas proposed, right? You need to develop best ideas out of the many ideas. Now the ideas you are going to select is basically depend on your organization. You have to fit into that idea into your organization and the capabilities. Now, say for an example, now the parents as a secondary target group, and they are telling what they're expecting from a children's savings account. We need a offer higher interest rate, right? Now we need to look at it from the bank's point of view. Can we give such a higher interest rate to that account? So that we need to look at the cost and the profitability, right? And also we need to look at how appealing all these idea to the children. So with this platform or with this background, we may select the best ideas developed at the idea generation stage. So therefore this stage we call them as idea screening. That is the second stage of new product development. What is the first stage? Idea generation. Now screening. Now once we have done the screening, mind you, so we have a more suitable ideas to be developed, right? And now second, we move to the third step. Third step is called concept development. Now this idea is an idea now which have screen. We have to develop for a specific service concept as a feature we need to develop, right? And also we need to look at it, this concept. So we develop the idea selected into the concept, right? Okay, that's the third step. What are the features we are going to offer, like that? Then we need to look at it. The fourth step is what you call marketing strategy development. Now that means, so you need to look at it, okay, how am I going to develop my marketing strategy to bring the children's savings account to the customers? How we are going to use our advertising, our sales promotion, and things like that. So you need to look at the strategy, how we are going to bring these children's savings account into the customer's doorstep, right? That is what you call marketing strategy, right? That step is market. Now all things have not still launched, but we are still developing how we are going to take this message to the customers, message to the target market, right? That is marketing. And also then you need to look at some business analysis. Now what do you mean by the business analysis? Mean, okay, then you need to look at some information pertaining to how many children in Sri Lanka, what is their population, uh, like that, children's account. So say for example, so the students below 10, 15, 16 years below, how many are is around, to according to the Sri Lankan population statistics, will help you to analyze, right? Maybe around 3, 4, 5 million from the total population. Now, how many accounts you are going to open? How much of money going to deposit by those? What are the initial deposits? So, proposed sales targets, profit, cost, all things we need to look at under business. And once we introduce this children's savings account, what is the profit we are going to generate? How many accounts we are going to open? What is the deposit balance we can generate from this? So that is the business analysis, right? We need to do the business analysis to see whether it's a financially viable before you launching a new product. Now what is the product we are discussing? Children's savings account. So business analysis, right? And then, so now we finally develop the product. Now we prepare the, say for an example, passbook if you need, or maybe some gift what you are going to give to them. So we develop the product and put the brand name for that product, right? And in this stage is very costly. Actually, produce a physical product. So associate with the children's savings account. We put the brand name for that, and we are actually produce the product, right? And then the moment you, now everything was ready, now everything is ready. Now what you're going to do? Are we going to launch the Sri Lankan market at once? No, we are not going to launch at once. We want to see whether the product what we have developed is accepted by the total market. Therefore, before we going into the Sri Lankan national market, sometimes we do some test marketing. Test marketing mean basically test the product in the real life situation for a sample. Right now, sample whether they accept it. Now, what do you mean by a sample? Sample is a representation of the population. If the sampling is good, whether it give you good results, but we can, what the bank will take to launch the product in nationally. But country, Sri Lanka is very small country, is okay. But country like India is a huge country. Launching entire country is very costly. So Sri Lanka is not, but still people do some test marketing. But remember the test marketing, when you're selecting the test marketing, we have to be very careful. Why? The competitors are get to know all these things, right? So competitor can do something and can come up with counter attacks, because all other banks are having children's account. They can develop new the same feature they can give. Then our launch is useless. But remember this, usually in Sri Lanka, the test marketing has to be represented. No, test marketing means do actual launch the product in a sample. So sample has to be represented the population. Usually in Sri Lanka, we take Gampa, Candy, Gol, Dam area. So we will again do and give that products to the children and the parents and ask, what do you think about this product? Ah, now this product is good, interesting, very nice, attractive. Or some people can say it's not good. Then what you need to do? You have to relook at the product now. Because why? Because product is not launched yet, right? Why those steps involving in a new product development process? Every step you are testing because the every stage is costly, right? Okay, now you understood. We got the customer's response. Superb finance, superb children's savings account. Children are happy, parents are happy. Now, what you're going to do? Now, you're going to commercialize the product. That means you are introduced to the Sri Lankan market. So, for that, you may have some appropriate marketing strategies, special offers. Do your first students who got these things having some scholarship, some gift package, or maybe higher interest or whatever. So this is how the commercialization is taking place in the so-called children's savings account, right? So I think you have an idea about what is new product development process. You see, it's a time consuming, and also, right? Remember, when you do new products, the competitors also get to know. Right now, I'll tell you a classic example in this case. You know, the Gillette case was a big. So the first time these, the disposable razor, or kapala visikaran, disposable razor, that idea came initiated by Gillette company. So while they developing these new products, is a disposable razor, right? And their competitor, big, came to know, get to know the Gillette is going to come up with product like this. So what big company has done it? Big company introduce a similar product before Gillette put that disposable razor into the market. Now you see the bad side of developing a new product, the process, right? So those are some of the things because other banks maybe come up with some counter attack to your new products, right? Now that is the steps involving in new product. I give you an example. So think on that ground. Idea generation, how to generate your idea, then why we need to screen the idea, why you need to develop the concept, and why we need to develop some marketing strategy for that. And then we discuss some business analysis, whether it is a viable to launch or not. And then we develop the product physically. And then once product is okay, we do some test marketing to accept whether the product is accepted in the market, and it is so we introduce to the national market. So that is the new product development process, right? I'll give you as an example children's savings account. Clear? Right. It's very interesting, right? But remember, as I told you, new product development process is very costly. Failure is very high, right? And most of the time, what happens when the banks introduce a product to the market, so they may not look at it, but it is a duty. There's, I told you, there's a separate committee, separate division, or separate person involving to look after these products. Now, say for example, organizations like Unilever, and there's a one person. Even for banks, they have some brand managers. They may be responsible for that brand. There are some people who look after certain brand. So he has to go through all these things and he's following now. And monitoring and evaluation is important, right? Remember, that is what you call product review process. Whether the product what you have introduced are going to achieve so-called target what we have set in the business analysis process, right? What are the things further you need to modify, right? So we need to review the progress of that committee, right? And what the income generated and revenue as according to what we have planned, anticipated, whether we are coming, right? The goal adherence of the product, that means are we achieving the intention objective of the product, right? And we need some more resources, any further modification, or we need more advertising, right? We know we need more attention from the branch sector. So all things we need to look at it once you introduce a product. So monitoring and evaluation is play an important role, right? Product review process is important, not just introduced to the product, and reviewing also play an important roles, right? Okay, so I think you understood that part as well. But you see, with all sort of problems and all sort of steps we involve in, we step followed, right? We carefully analyze all the steps. But once you introduce some products to the market, product fail. Nobody is going to buy. What are the reason for that? Why most new product fail? Right? Why most new product fail? And it is identified why new products are fail basically, right? If you want to, why new products are fail, because of poor timing. The wrong time you introduce. Now, say for an example, it's a very famous case in marketing. Right now, we have a very cool days. Every day is raining, right? Very cool temperature in the country. During that time, we are going to introduce ice cream. But that's not good time to introduce ice cream, because not because ice cream is banned, people are not taking because of the cool weather. But suppose a hot weather, sunny weather, very hot and all, and that is the ideal time. So timing of introducing to the market play an important role. So then poor applications of marketing mix. That means, so you are not using the correct price, correct promotion method, correct products and things like that. That is poor applications of your marketing mix. Last week we discussed marketing mix like a jigsaw puzzle, right? So you need to have all the elements to complete your puzzle. And sometimes the most new product fail because sometimes the competitor, they have come up with counter attack to you. They have done something counter attack to you. Before you introduce, they come up with more interest. Now say your special feature for children's savings account is giving a higher interest rate. Have you understood? You are going to give this interest rate. Another bank come up with more than your interest rate. The entire campaign goes to waste. So your product is fair. So because of some competitor activity. And the next one is poor marketing research. So we discussed earlier, before you develop a new product, idea to be generated. Now from idea generations, you need to ask from actual owner, actual target users, or maybe target market. If you are not done your market research correctly, that means you ask the people who are not children's, so your figures are wrong, right? Your findings are wrong. So therefore, mark product is fair. And another important thing, you feel it, you won't feel it any difference. This is a yet another children's savings account like any other bank. You can't see the difference of product A of that A bank, children's savings bank A, and bank B. Both are same. So that is the reason you product fail. But I won't feel it any difference. Your product, your bank children's savings account, and your competitors' products, right? So that is another reason why the new products fail. Okay, right now. So there are so many things. I told you last week also. Remember, there are some degree programs in marketing in Java. Post degree in marketing. So that means for entire 3-4 years they talk about the marketing. They talk about all these things in 4 P's. But I'm trying to tell you a nutshell like HR, right? And remember HR, we have learned or you get an idea about what is human resource management. Likewise, marketing also I'm trying to give you some knowledge, some idea. Okay, right. So still we are in the one marketing mix element. What is the marketing mix element? We are discussing product. So up to now what we have discussed, what is product, what is the level of product, what are the features of a product, and discuss why product is important and what are the why we need to develop new products. uh, what are the factors we are going to look at when you're developing a new products. Then we discuss how to develop a new products, product development process, and with all sort of things we discuss why new products are failed. And then another concept we are going to discuss, that's the important thing, is what you call product life cycle. And these are very interesting and very important things, right? One time the examiner asked from you for one question, the first question, steps, what are the stages involving in product life cycle? You get 2 marks, right? So apart from that, there won't be much questions on that. Right. Now, what is product life cycle? Now, like human being, now we have a, right, we also have a lifespan. So product and services also have a lifespan, right? So therefore, product life cycle is basically divided into things like this, right? Okay. Okay, now just look at it. I think it's in your handout also. Product life cycle is consist of mainly for 5 stages, right? But you can put 4 stages. Now, one stage we have already discussed. What is that? Product development stage. That is the new product development, right? We have already discussed what is happening in the new product development stage. Okay, the moment once you introduce to the market, from that point till such time you die your product is called product life cycle. So therefore remember, so product life cycle is a model. By look at it, this model, you can take a lot of marketing decisions. You can use a lot of strategies by look at it. Now just look at it. The first curve, what are the stages? There are 4 stages, 5 stages altogether. And y-axis talking about the sales or profits or whatever, call the deposits, whatever, or lending amounts or whatever. And the y-axis is x-axis is talking about the time duration, right? Now let's look at it. The top curve is called the sales, and the second section we call the profits or profiles or profits, right? Okay, let's look at it now. At the introductory stage, now you any bank having different type of products. Now, can you put those products into this product life cycle? Another example, take your family. Now put, right, your family members into this, right? Some people, some young guys, their mother is expecting a baby. What is stage? That product development stage. Your younger brother just yeah, in the just maybe 3 years, 4 years, and some are 13, 14. Some brothers are maturity. Some brothers are maybe at the old stage, right? Depend on your family members also you can put into this. Okay, that is we need to understand this product life cycle, because why, you can take a lot of decision based on that. Right. Now let's look at the introduction stage. Let's look at the introduction stage. Oh, so we discussed about the development stage. There's the new idea comes, the development stage. This stage is new product development stage, right? That I am not going to explain. Now we look at the second stage is what you call introduction stage, right? Introduction stage. Now I'm using this, I will explain. You are having your note, right? Now, the introductory stage, the product is introduced to the market. So, what are the characteristics at this stage? People are not aware about your children's savings. I take the children's savings account. People are not aware about your children's savings account. So, what you're trying to do, you're trying to create awareness about your product. So, you need to put more marketing or more advertising about the product. So you have a brand name, right? You, because the initially your sales and your profits and your deposits are slowly growing, but your cost is high. Why? You need to spend more money for create awareness about your brand. And profit also usually it's not enough, because it's not enough to cover your product development cost, right? Then we move into the second stage, that is the growth stage. What is talk about the growth stage? Now growth stage, you see the product is now sales are increasing. Now, now you create awareness, right? Profit also rising, and also remember the competition is also rising, because they are where your product is, your children's savings account is growing. So you see, you need to take some decisions during the growth stage. So you need to convert your brand awareness maybe to brand loyalty, right? By your sales are now increasing, your profits are increasing at the growth stage. Then come to the next stage, the maturity stage. The maturity stage where you see the highest profits, higher sales. That means what is your main objective? You need to protect your marketing objective is to protect your market share. Why? During when the product is at the maturity stage, that profit give highs, and then what happen? The sales also high. And you need to protect your market share during this time. Right. Now important things, you require the maturity stage. So production is going to come down. Remember that. So you need to look at it. So then what you are going to do? You are going to relaunch your product. You want to extend it your period of maturity. Now, if you take for an example, take sunlight. Now, what sunlight? Sunlight at the maturity. What the Unilever is doing? Keep on extending the product. Then sunlight now Sudiki. Then sunlight now Pataki. Then Sakura Suvan. Nilumani, picture month, right? So what they try to do? They keep on extended the product life cycle by developing new product, modifying existing product. So banks also like that. So banks also adding value for some children's savings account. After some time, they give some more benefits or change their entire interest rate structure, whatever. So what the next stage is the decline stage. So your sales are coming down, your profits are coming down. Some people are withdraw from the market. Now, classic example I can tell you, we had a toothpaste called SR. Ask from your mother, where is SR? Where is Rexona soap? There's no. Once the products go to the decline stage, it may be removed from the marketplace. So there are some products in your organization may have in yes, not marketing now, right? Now you see how important the product life cycle uh, in your business. So what is the important thing? You can take a lot of decisions based on your stage of your product. Right now, say example, introductory stage, what are the strategies you are going to apply? At the growth stage, what are the strategies you are going to apply? At the maturity stage, what are the strategies you are going to apply? So, having understood about the product life cycle, you can take some appropriate decisions, appropriate strategies. That is why we need to understand product life cycle, right? And then I hope you understood the product life cycle. And then what are the advantages of product life cycle? As I told you, now you can use different marketing strategies at different stage, and you can do market research. You can to come up with a new idea to develop a idea, because why? Suppose your product at this stage, suppose your all products at the latter part of the maturity, so that means products is going to come, there's no new products, right? So that gave you to develop a new products. Okay, so those are some of the advantage of product life cycle, and you noted that is very simple. Now, one time the examiner asked from you, I can remember, what are the 4 stages in product life cycle? Usually it's have a 5 stage: new product development stage, introduction stage, growth stage, maturity stage, and decline stage. What are the um, strategies you are going to take? What are the characteristics? Now you look at it from introductory stage: sales are low, profits are low, like that. Then growth stage, profits are growing up, sales are growing up. Maturity stage, profits are very high, and then sales are high, things like that. Okay, costs are high, like that. What are the marketing objective in each and every stage? So those are the things we need to look at it under, right? So thereby we just completed the product, one element of the marketing mix, and that is the product. Okay, clear? So we just covered the important element in the marketing mix product. So as I told you, what are the things we need to learn about the product? What is product? What are the features of product? Then we discuss what are the level of products, right? You will come to that. Why you need to develop new product? What are the factors you need to look at it? What is product life cycle? Right? Why you need to review the products, and what is new product development, things like that. Okay, so there are so many things you can learn under this, right? Now examiner, if you are in the degree level sometimes, and what examiner is usually the degree level, they ask you, they explain some products and tells they have in the higher market share, and they have the some figures, and they ask you to come up with strategies. So that means you are at the maturity stage. What are the strategies you are going to apply? You need to look at it whether I can extend the existing products like sunlight. Then sunlight now soon they can extend the product life cycle, right? Keep on extended, otherwise product's going to come down, right? Okay. Right, now we just completed the product as a very important element in the marketing mix. Now we are going to discuss another important element in the marketing mix. So another important element in the marketing mix, and that is what you call price. So we are going to discuss in detail what is price. Now what is price? The amount of money customers have to pay to obtain a product or service. Now, price can come from many forms. Now, for bank people, what is pricing mean? The interest charge, the commission charges, the fee charges, also income for a bank, right? For sometimes we call the rent also price for person, fare, bus owner. So salary for us and subscription, donations. You can mean can price can come from many forms, right? Wages, commission. So list is seemingly endless. But what is price mean? Amount of money customers to pay to obtain that particular product or services. So that is what you call price. Right. Price is play an important element in the marketing mix. Right? Now let's look at it now. Now there's a question. So you have to write down there, right? Okay. Now we discuss in principle, there are so many elements are proposed by different people during different times. But in your exams, we discussing about the 7 P's. What is 7 P's? Price, product, promotion, place, people, physical evidence, and physical evidence, and process. Those are, we call them as the 7 P's for especially for services like banks. Now there are out of these 7 P's, why pricing is unique? That doesn't mean other elements are not bad. Why pricing have some special feature when compared with other things? Now you need to recall the same phenomena we discussed on HR. There are so many resources available for an organization, physical resources and things like that. Why human resource is unique? Similar way, why pricing is unique, right? Why pricing is unique when you compare with other marketing mix variables, elements. Let's look at it, the first point. You see, all the other elements are expenses. It has, why? All other elements of the marketing mix are expenses to the organization. Money is going out from the organization. But pricing is the only income generating element in the marketing mix. That's the first point you can write down. Only income generating element in the marketing mix. Only income generating element in the marketing mix. All other mix are expenses. First point, right? You know why now pricing is important for in the marketing mix compared with other elements? Only revenue generated element, income generating element. First point. Clear? Right. Then the second point. The second point. Now you saw in bank. Now I think you all of you are maybe some of you are working in the bank. There is a committee. I think you may learn under commercial banking or may survey. You may learn this committee. What is a committee involving in pricing? We call them as what committee? ALCO, ALCO. ALCO means Asset Liability Committee. Usually, pricing decisions are taken by not by a one individual, by so many people. Why? You need to look after, you need to look into a lot of factors. So the second point you can say, right? Pricing is basically involve many factors and many variables, right? So pricing is depend on many factors. So therefore we need to look at it, competitors, we need to look at it, the profits what you are going to generate from the organization, affordability, all factors, lot of variables we need to look at it before you are setting pricing. Legal aspects, right? So say, right, so many variables and many people are involved. Second point, many variables, many people are involved. Example, ALCO decide pricing, that decide the interest rate or on the, especially in the bank. You can say example ALCO, A capital L C O, ALCO. The committee usually have in every bank which determine the pricing of the organization, financial product pricing. Second point, right? You see how important. But other factors may be decided by 1 or 2%. But pricing you need to involve a lot of variables and a lot of people. Second important thing. Third important, main factor influence purchase. Right? Third factor, it is the main factor influence purchase. Right? Other factors we will not look at it. Why you come to my bank to deposit money? Only factor you take into account the interest rate. Why you come to my bank for take a housing loan? Only the interest rate. Why you come to pawn the article into my bank? Because of that bank is give you high volume, high amount, or maybe less interest. So that's a reason. So therefore, the pricing is the main factor which deciding the purchase. Third point, right? Now we have learned 3 points. Okay, next one. You can act as a competitive weapon. Act as a competitive weapon. COM, PETITYVE, competitive weapon. Tarangakariyo, competitive what tandable? How? Now we do know. How? We'll ask customer, come to my bank, I'll give you a better rate. Now that customer is taking the money from other bank and come to your bank. Undercutting, pricing, right? Therefore, remember, pricing can be used as a competitive weapon. Pricing can be used as a competitive weapon to compete with your competitor. Right. Another point. Pricing can be used as a communicator. Can be used as a communicator. Sometimes you see there's nothing shown, only the big letters, interest rate. Some banks are showing only the interest rate. So by what we are telling, what we are doing, we are communicating the interest rate. That means we are communicating the pricing. Now, if you go through while you are going through, you can see, don't think about the banks. Fried rice, rupiah LCI. So what they are talking? Price element, right? Price element. So therefore, price can be used as a communicator, right? And remember also, price is associated with what? Quality. Price is associated with quality. And pricing is the convergence point where customers and banks are meeting. Combined, right? So these are the some of the unique features of pricing when you are compared with the other. Okay, let me just list down again. One factor is the pricing is the only element which generate revenue to the organization. All other marketing mix not so, the expenses. Second, so many factors, so many variables are taken, we need to look at it. That's the second. And pricing is the some of the main factor which determine the purchasing. Fourth factor, it can be used as a competitive weapon, right, to compete with your competitor, and can be used as a communicator, and can be used as a qualities associated with always with the quality. And these are some of the, and remember, it is the convergence point. That means where the people and buyers and sellers are meeting, right? Convergence point. So because of this, pricing you can consider as a unique factor. Okay, right. So we have learned now one element of marketing mix, and that is pricing. Right. Now let's look at it now. Pricing, when I told you there are so many factors, you need to look at it where when you're deciding your pricing. Now for banks, pricing mean what? Interest rate, commission, fees, charges, what? Right? Okay. Now let's look at it. What are the factors you need to look at it when you're setting pricing for an organization or product? Right? Some factors. You may need to look at this. I told you the product development is costly. So it may be the marketing cost for advertising, sales cost, the commissions are giving to salespeople, administration cost, all cost. We need to look at it. Cost of capital, sometimes we call overhead cost. And also we need to look at it. What is the profit you are going to generate, expecting from selling this product? A level of profit, margin. What is the margin we are going to keep? Second, we need to look at it. What are the other competitors offering? Other banks offering? Important thing. Can't just charge high rate. We need to look at it. What are the competitors' price? Then we need to look at it. What customers are willing to pay. One of the important thing is marketing principles, co-concept. Customers' willingness to pay. Michara gana deala, kanna mat worth. But and also you look at the bank consideration. What do you mean by the bank consideration? Suppose your bank is a new bank. You want to capture the market. You want to penetrate into the market. Then you need to give higher rates for deposits and lower rates for your lending. And also you need to look at it. What are the other regulatory factors? Now central bank has given you can't charge more interest rate for lending. They have given pony maximum is how much? 10%. But some banks are giving less than that. That's a different story. You can't charge 12%. Now we go from August, somewhere in August 16th or so, the maximum charge you can from the for credit card interest rate how much? 24%. Things you need to know all these things, right? There's some regulatory requirement also there before you're setting pricing. For pricing depends factors. Now, based on this, who take the decision in banks? There's a separate committee called ALCO. Of course, sometimes the ALCO, once you decide, it has to go to the board. It depends, right? Okay. So therefore, you need to look at it so many other factors. Right. Now let's look at it. Right. Now obviously let's look at, but so far no question asked on this. But you need to look at it. Type of pricing using financial services. Up to now there's no question, but I will try to explain to you. Right? We call tiered pricing. What do you mean by tiered pricing? Now sometimes, say for an example, your loan amount is 350,000. Say for an example, so your loan is 350,000. Based on the type of security, right? So you have a different interest rate. The tiered pricing, right? Now, say for an example, up to 100,000. So you have the life policy, you're having a separate interest rate. It's like floating rate. Now, up to 200,000, your market value for some company shares, based on your security, we have a separate interest rate. Over 200,000 personal guarantee, you have a separate interest rate. Right? Now, say for an example for tiered pricing, now think about bank employee. Think about you. You have taken loan from your bank. Now for the entire amount is same? Not, no. So up to five, say your loan amount given by the bank for you is 1 million. Up to 500,000, you charge only 5%. 500 to 750,000, you charge 8%. From that to that, you charge 10% like that. So that type of pricing we call tiered pricing, based on the amount or maybe based on the type of the security, or maybe based on the amount, you may have a different interest rate. So that is we call tiered pricing. Second one, we call bundle pricing. Bundle pricing means we'll have a two pricing methods. In the case of certain insurance product offered, special interest is payable for the accumulated premium paid by you, considered as saving. At the same time, the monthly premium is payable for the life cover for them with illness or death. You have another pricing. So you have a bundle pricing, right? You put together, okay, some two pricing. In some you have a two-part pricing, right? Now, two-part pricing is this for credit cards. Say for an example, you have a fixed fee plus interest. Now, good thing is two-part pricing. Take your mobile phone, go and look at it. Your electricity bill, water bill. There's a fixed part and the variable part. So this two-part pricing. Just take an example for your home electricity bill, or maybe for your water bill. They are a fixed price. 50 is fixed, right? So you get into the taxi, two-part pricing sometime. Why? So the moment you get into the taxi, they put 50 rupees or 60 rupees or whatever. And then the second, the way you go, it will have increase. Two-part pricing. That is two-part pricing. For banks, we have a credit cards, right? Okay. Then we have a tailored pricing also. So what do you mean by a tailored pricing? So based on your customer, right? Depend on your type of customer, the bank will have a tailored pricing to you, right? So some banks are giving different interest rate for different customers based on how good that particular customer is. That is what you call tailored pricing. Now there are some pricing we call, right, captive pricing. Now captive pricing means sometimes if you purchase a motor vehicle, it is compulsory that you take vehicle insurance cover from that leasing company, right? If you give your loan, right, and also take this. And again, sometimes we also do, when you granting a loan, we are requesting to open savings account. That is captive pricing, right? There are different type of pricing methods. And also sometimes we call time pricing. What is time pricing? Now, time pricing means different interest for different time periods. Say for an example, 3 years, 3 months, 6 months, 12 months, you have a different interest rates. That is time pricing, right? So for 1 year, how much you are giving? For 6 months, how much you are giving? For 3 months, how much you are giving for your FD? So that is time pricing. So the pricing based on the time period, right? And pricing of option. So sometimes, so you need to have a minimum balance. If you have a less more than that, you will charge. If you are not maintaining a certain amount in your savings account or current account, so bank will charge you some price. So that is pricing of options. So some banks need to maintain certain minimum level in your account. Now these are some pricing methods. I think you are aware of this product type of pricing, right? Then you have a product range pricing. Now again, it's type of the security. Now say for an example, if you have a mortgage security, usually the interest rate is low. If you go for a personal security, your usually is high. So mortgage, personal, so product range pricing example, right? Mortgage pricing and personal pricing. Okay, right. Then you go for transaction pricing. Now, what is transaction pricing mean? Now you go and withdraw the money from your ATM. So you withdraw only 500 rupees. So they will charge you at 5 rupees. Then you go again, you withdraw 20,000. Still they charge 5 rupees. So what do you mean by that? It is transaction pricing. So every transaction, there's a fee involved. Example for commission charge from ATM transaction. That is what you call transaction pricing, right? And remember, all are very, very interesting thing. These are type of pricing methods. Clear? Type of pricing methods. Clear now? So even though I'll explain to you all this pricing method, right? So far, the examiner not directly asked any questions about the pricing method. But banks are using these methods. Please go through your handout and see what are the type of pricing methods your bank is applying. Another type of pricing, even though it is not there, as I told you, we call a penetration pricing. Sometimes they call cost plus pricing. What is cost plus pricing mean? Basically, right? And you say you put cost, the cost of capital, and plus some margin and selling. Cost plus pricing. That means you work out the cost. What is the cost of capital? Right? How much you spend for that? And you keep a margin. That is called cost plus pricing. Another methods. right? Cost plus pricing. Other one is we call penetration pricing. Just to understand all this pricing method, what is penetration? Now, somebody want to get into the capture the entire market. You need to go to the each and every person, right? Usually, the penetration pricing is the low price. Think about the Sri Lankan mobile company. Now, suppose a new mobile company want to come into the Sri Lankan mobile banking, mobile phone industry. Suppose another, say, Idea from India, another mobile company in India, very famous one, they want to come to Sri Lanka. They want to capture the Sri Lankan mobile market. What is the pricing? Only thing they can use the penetration. Give charge low as possible. Then people will go as provided full coverage. That is what you call penetration pricing. Now another example is skimming pricing. SKIMMING. What is skimming pricing? Now think the same the mobile company. Remember, old days when you are very small, you may be not born during that time. We had a huge mobile phones. Gadol bhage ke liye. Do you know how much that phone during that time is 100,000, 150,000 rupees. One mobile. Those days, 10, 15 years ago, 150,000 is now 1 million or something. That is skimming pricing. Why? Only few people can, nobody is giving that price, nobody is available to buy that product, service. Only few are offering. Can you apply now for mobile phone skimming? There are enough phones, enough connections are available at a cheaper rate. Nobody is going to buy. That is skimming pricing. If there's nobody, you can charge skimming, right? Okay, then there are sometimes you heard about emotional pricing. Heard about emotional pricing? We usually call what pricing? Barter price. We call barter price. Hatalis namyayanuwa. 59.90. We won't feel it is 60. We think it's 50. So that is emotional pricing. That's the barter applies. Hatalis namyayanuwa. Pannas namyayanuwa. The moment you say 60 is too much, if you say 59, 90, we feel it is 50. So that is we call emotional pricing. So therefore, a lot of pricing methods are available. A marketer can set for you their things. But as far as we are concerned, we will look at it from the banking point of view, right? So we discuss some of the pricing methods adopted by banks. Now, banks are now have a pricing for floating rates as well as fixed rates, right? The famous banking pricing method is fixing fixed rates and the floating rates, right? Okay, so we learn what is floating rate interest rate. Okay, now having understood now pricing, why pricing is important, what are the factors you need to look at before you are setting pricing, what are the pricing methods. Now we have the right products, we discussed that. Then we have arrived the right price. But still we have a problem. Why? We need to have a place to buy this product, right? So then it comes to the delivery channels. The delivery channels. And delivery channels in marketing is a P is called place. Product is available. Now you look at it now. There may be a lot of changes took place for financial delivery channels, a distribution of services, right? If the examiner asks you what are the delivery channels available for Sri Lankan banks, great changes from face-to-face personal channel or personalized banking, branch network, ATMs. We have now cash recycling machines, things like that, telephone banking, internet, mobile banking, and with the mobile apps. palm top banking, doorstep banking, SMS banking, banking using tabs, mobile banking services in rural area. We are using the vehicle. So those are delivery channels, right? There are so many delivery channels are available for whom? There are so many delivery channels are available for banks, right? So you see, these are the new channels. Earlier only brick and mortar, only the branches or ATMs. Now we have enough delivery channels available with the bank, right? So delivery channels play an important with the developments of information technology. So banks are now come up with different delivery channels. So what are the functions of delivery channel? Let's look at it. What are the functions? Right now, what is the purpose or what are the jobs they are doing? Important things. One is promotion, spreading communication about product and services. Now, take for an example, your branch. You put banners, you may display materials, there something is going round and round, right? So you may use channel for promotional businesses as well, right? And you look at the ATMs. When you go to the ATM machine, also you see some commercial while you're waiting. This commercial is going, right? Clear? Right. And contact. And channel place where I contact customers and buyers and the bank people. And matching purpose. So what is matching? When customer comes to your bank branch and he talk about his need, financial requirement, what you as an employee do, you're trying to match his requirement with your products. So therefore matching function. And not only that, the channel provide information function. Collect informations about from the customers and also communicate information to the customers. And sometimes when you're talking with another customer, he said, "Apo, gulungi bank mecher, arra bank mecher deno, poli arra bank meva deno, arra bank meva deno." What you are getting? You are collecting informations about your competitors, and also you are telling your key points, right? So therefore, remember, channel provide four main functions: promotion functions, contact functions, matching functions, information functions. So therefore, remember, your delivery channel facilitate to bank to improve your market share. Remember that, improve your market share, right? So banks today are using multi-channels to deal with your customers. They have given a lot of options, right? Can go to the counter, can go to the machine, do business through internet, like that, right? So the channels play an important role in today's business. Right. Now we learn another marketing mix variable. That is what you call place, the delivery. Now we have the right products, we have a right price, now we have a right delivery channel, but still we have a problem. What is that problem? People don't know about your product and services to purchase or to do transaction. For that, we need to communicate with them. We need to tell them. Then only they sort out the problem. And now that comes the another element in the marketing mix is called the promotion. Right? Okay. Communication. Right. Now let's look at it. We need to communicate. This is not in your handout, right? But doesn't matter. So how we are going to communicate? Please put down this point somewhere. I'll try to explain. It is not in your handout, right? I just added. right? For that, we need to communicate with the customers, right? So if you want, just put down this, don't draw this one, right? And put some words. Now it is important. We need to communicate with the customer. And this is the communication process. And the information or input, right? What I mean, information. That the messenger. That is you as bank. You are telling about the customer. I am giving pawning 10% or maybe 9% interest rate. That's a message I need to communicate to the customer. That's output. When you're communicating my message, I may code it. I use certain words and customer need to decode. The recipient need to decode. If your decoding is wrong, that means you are not understood the message. If you understood me, you have the feedback. That means your response to what I communicate, that means your communication process is good, right? So this is a very basic communication process, right? Any communication follow this. To what extent they are changing this coding, decoding is different. The message, right? I hope you understood the very simple, very basic concept, right? So that is what you call marketing communication, right? So that is what you call marketing communication process. Clear now? Right. So through this communication, how we are going to do these things? So we are using some promotional methods. We are using promotional methods. Sometimes some organization we call them as promotional mix. Now let's look at it. Digital marketing, direct sales force, advertising, direct marketing, sales promotion, public relation, publicity, sponsorship, exhibitions, and trade fairs, promotional literature. So these are the method of communicating or promoting promotional methods available for a marketer. Now let's look at it. Your bank, what are the methods your bank is using to communicate with your customer? Send your message across to your customer. Which methods using? Your bank is using all methods, or maybe some methods, or given on the some of the situation you may use different methods. Right. Now what we are going to discuss. So we are going to discuss little bit of all these promotional methods, how bank can be use these methods, how banks can be use these methods, right? Okay, so banks are using these methods, right? Let's look at it now. First one is the digital marketing. It's a very famous one, digital marketing, right? So what is digital marketing? Is a broad term, right, that refers to various and different communication techniques deployed to reach customers via digital technologies in a cost-effective manner. So that means, so what is digital marketing mean? So we are using various different new communication techniques to reach the customer in a digital manner is what you call digital marketing, right? Using some platforms or technologies. So what is digital marketing mean? Is a broad term that refers to various and different communication techniques deployed by the bank to reach the customer by using digital technologies. That is called digital marketing. So we are going to touch on various four main digital marketing techniques, platforms. One is internet marketing. How we are going to use the internet to market your products. E-marketing, mobile marketing, and social media marketing. Let's try to understand all these different methods in a very nutshell. What is internet marketing? Internet marketing is the network of computers, so which are linked together, such as the computer user may communicate with the other computers in the system, right? So as far as today is, you have the mobile phone. Through the mobile phone, you have the internet facility. So you communicate with them is called internet marketing. So you have an intranet, you have an extranet, and you have a corporate website, web pages, internet banner, video streaming, that with the YouTube, social networking, and microblogging, Twitter, like that. So you are trying to communicate your messages to customers. That is what you call internet marketing, right? So you are trying to communicate with another person through the computer or may use of other technical devices, right? So that is internet marketing. Website, web pages, extranet, right? Intranet. So suppose you're bank person to person, how you're using? Intranet, that is internal marketing. Intranet. So with other people, use extranet. You can communicate with some blogging, Twitter. I don't want to explain all these things, social networking and microblogging, and you are very thorough on this. So that is internet marketing. And then what do you mean by e-commerce? Buying and selling of product and services is considered the electronic system. eBay, Amazon. Now you see what a what a what a what are communications done by eBay, Amazon, number one in the world, Amazon. So there's some small restriction because of this uh, corona, but these are the new methods of communicating, right? E-commerce, clear? Right. Now let's look at it. Email marketing. Marketing technique that uses emails to send marketing messages to target audiences. A lot of emails are coming now. Some SMS is also coming now. You have opt-in option, right? You can say no. Now, how many banks are having email options now and SMS options? So send marketing message to a targeted audience. And mobile marketing, right? That is what you call SMS. So there are free or pay mobile phones, Google Maps, WhatsApp, bank apps. So you have so many apps to deal with. So that is mobile marketing, right? So digital systems, right? A lot of methods available. And then the very famous one, what you call social media marketing, is a form of internet marketing that utilizes social networking websites as a marketing tool to attract website traffic or attention through social media site, and is very cheaper and attract larger forum. There are some disadvantages, but then very cheap methods. When you're communicating, when you're marketing through TV, radio, and all, very costly. Those are traditional. These are digital way of communicating, cheap cost. So then we look at it, a famous social media. So social media is variety of web-based platforms and application technologies, and online and the latest buzzword in internet marketing over the last few years. So what are the social networking website? You see Facebook, Twitter, Google, YouTube, LinkedIn, MySpace, Instagram, blogs, right? And you see the young guys are now not going for Facebook. The young guys are going for Instagram because the Facebook may be open up. Anybody can see. The privacy is not there. So therefore, now the young guys are going for Instagrams than a Facebook. Right. So just a latest research. Right. Especially the young guys don't want to expose so much. So when you go for Facebook, is exposed. Everybody can see. But Instagram, there's some restriction. So a lot of young guys are now moving from Facebook to Instagram. Right. Now, what are the common advantages of digital marketing? So that is what we need to know. Most of the time, the examiner may ask all these things. What are the advantages of digital marketing for a bank? Fast and easy access, very quickly. You see how important those digital marketing during the election campaign, no? Fast and easy access, cost effective, very cheap. Sometimes you can measure how many hits, how many people watch, and things like that. It's a measurable element is there. And sometimes you can focus and specific, and you get instantaneous feedback. And you can develop sometimes the personalized messages, wider geographical reach. You can use your brand engagement. So what do you mean by the brand engagement mean, right? So there are some separate Facebook's pages available with associated with certain brands, especially for Unilever products. If you have some problem to your skin, they talk you on this. So brand engagement and also long-term exposure. And these are some of the advantages of digital marketing, right? Now, these things you need to know. Most of the time, the examiner may ask from you, what are the advantages of digital marketing for a bank, right? Now, banks are now using digital marketing as well as other traditional marketing methods, which I'm going to explain to you, right? Little while ago from now. Right. Now let's look at it again. Another important things. So what are the emerging technologies? Something we call interactive marketing, right? You see the Facebook, so don't worry. And then you look at it. So what are the emerging technologies in banking? Emerging technologies in banking. Another important area. Open banking. What do you mean by open banking? Right. Now, open banking means, according to the secrecy law, you are not supposed to give the information to the third party. But in open banking, third party application will be permitted to access consented customer data through application programming APIs. So you can access to different banks in a single electronic platform, right? But provided you are getting the permission. This open banking provides a greater convenience and choice in banking by allowing access to different banks in a single electronic platform. Only one platform, you can get into the other banks as well. You don't want to have a specific bank. So that is programming interfaces, application programming interfaces, open banking. Then you have another one, cloud computing. IT infrastructure as operation hand over to someone else. So banks no need to do it bank itself. And that part can be given to another party to do. So bank may concentrating in their businesses. That is what you call cloud computing. Right? Without bank itself is doing. So there's a third party who can do all these IT infrastructure operations, and which will facilitate bank to concentrate on more on a business. Then we have a big data or big data, whatever. And banks, the people who are having high information. Remember, the information can be considered as an asset. How many of us we are using these assets? How many of you we are using these bank customers' information to see the customer's insight, to take some better decision making, to develop a new products and things like that. So only thing is this data has to be put it in a program manner to use it, right? So that is what you call big data. This is a high volume, velocity, high variety information asset. We can take it very cheap and can take a lot of decision. And the next one is the business intelligence. And business intelligence, again, the technology is we call enterprise business intelligence. That means you can, based on this, you can take a lot of decision. You can take some accurate decision because you in a position to analyze a lot of information available with your bank. So those business intelligence, crypto, other factors will contribute your bank to do more better businesses and let these things take care by other people. And sometimes you have a distributed ledger technology and blockchain. Now, say for a good example, now every banks are keeping different KYC application. Right? Remember, now every person, every bank is keeping a KYC. Customer, know your customer forms. When you go to the X bank, they will also take the KYC. When you go to the Y bank also take the KYC. We keep a lot of unwanted materials. So why may not use technology? Common KYC. Only once you need to open a KYC. When you go to any other bank, so that bank can take that KYC. So using new technology, you're saving a lot of time, saving a lot of your storage facilities and things like that. It's a common KYC, and the central bank is working on that, right? And another important thing is the cryptocurrency. It's a digital asset. Now you see there may be a lot of new loans are offering by lot of fintech platforms, right? Loans are given, right? Using new technology. Bank like banks, right? So the technology, so therefore, is providing you a lot of benefits to the banks to communicate, to easing your operations and things like that. I just give you just for emerging technologies in banks, so you need to understand what are those things. And also artificial intelligence. Now in some part you have some. So you may have AI, robot instead of people, right? So they talk to machines. So machine will tell you what to do and how to do ideas and all. The robotics, right? So the new way, they will identify you, they talk to you, right? And they will guide you. He is not taking any OTs, he's not tired, he's not going to washroom or not going for it, right? So artificial intelligence also facilitate to take a good decision and provide some thing for you, right? Okay, so just to understand that part. Now coming back again to our promotion methods, coming back to our promotion, right? So this we look at it, direct sales force. Now remember, in the banking assistant in the front office, also direct sales force to some extent. But there are some organizations, some banks having the sales people. They canvas credit card businesses, they go to meet people and bring some businesses. So you make use them as some communicators. You can communicate. So highly trained sales people who work for the company. Now a lot of problem is now IT will take care about the back office work. A lot of staff are now involving in marketing businesses, marketing activities. Right? Now sales guy can talk good things to the customers. But remember, it's a costly promotional method. Why? Because you have to pay salary, right? Not like any other methods. You have to pay money for it, right? Some commissions, salary, and things like that. So therefore, you can use your employees for as a promotional tool. There are specific people to do that. That is called a salespeople. So then you have advertising. So these methods are we call traditional method, not the digital methods, right? We call them as a traditional methods. Now, what is advertising? Advertising any paid form of non-personal communication method by an identified sponsor. Now, now you may have a confusion of this definition. Now you see sometimes when you last somewhere in last July during the election, right? Now you noted sometime when you put some advertisement, you say, "May mudal giva prachare karna lagdaki." Yes, they say, no, "May mudal giva prachare karna lagdaki." That is advertising. Now, if you really look at the definitions of advertising, it is any paid form of, any paid form, mudal giva, non-personal communicational methods. පුද්ගලයෝ භාවිතා නොකර මාධ්‍යකාර කම් කිසි කෙනෙක් විසින් කරන එකකට කියනවා අපි advertising කියලා. Right? Advertising, now remember, it is any paid form of non-personal communication. It's not a personal communication, it's a non-personal communication method and identify sponsor. Right? You have identify somebody need to be paid that money. That is called advertising. So you can use advertising through the TV, radio, or press. Now, banks are advertising in the newspapers. Bank's name is there, identify sponsor. Banks need to pay to the published company. That is advertising. It's not free, right? You have to pay for that. That is advertising. Now, what are the advertising objectives? We can create knowledge, act as a reminder. Now, why sometimes you see advertisement, you can see every time, every other day, sometimes one back to back. Why? To remember. And sometimes you see some advertisement, you can see some telecine ads. The girl you show is a very big babe, and After 3 months, you say, nice looking girl. Now, what they advertise? If you want to have your body to be shaped like this, goal, right? And it provide motivating queries. It act as a reminder. Provide it increase the knowledge. They will compare something, right, with something. Rinso balala remove sabonu igala Venice. So comparison. So advertising have a many objectives, right? But as far as the banks are concerned, there are some rules. So children cannot be used as a advertise. Children cannot be used as a to advertise. Right? Now you see some advertisement published by the Unilever. He never said, the boy jump in here and there and say, "Ayo ada kohinde me shakti aave? Ammagin ahanna." So she can't tell the brand names. So there are some ethics in advertising. So in Central Bank of Sri Lanka also put some conditions to the banks. When you advertising an interest rate ads, you have to show effective rates. You have to show the bank rating. You can't carry out any misleading advertisement. It has to provide adequate information to the customers to take the decision. Right? So there are some limitation, but advertising is overall we make use of to communicate with customer. These are some of the objectives. Create awareness, change or influence the attitudes of a person, to increase knowledge, act as a reminder, create inquiries, to provide leads for the salespeople, and which support the salespeople job easy, because you have seen already in the newspaper and the advertisement and the TV, these are some advertising. And also you look at it. Sometimes another method of communications or promotion is called sales promotion, right? It's a short term in nature. You try to stimulate sales, right? Now, sometimes you say, go today and buy today only. This offer is only on valid today. That is sales promotion. You get a lot of SMSs offers for, especially from these visa companies, Visa, and things like that. You get this today, only Sunday. Those are sales promotion techniques. Short term in nature, try to stimulate sales. Now, banks also sometimes will do. We make use of some dates. Today is Children's Savings Day, October 1st. Now, it's going to come. If you open a savings account today, you get a special gift or maybe high interest rate. That's sales promotion. Through the communication, you're trying to sell the products. Right? Okay? Right. These are, we call them as sales promotion. Banks are heavily used. Right? Sometimes banks can use for this for particular period. New we offer. Right? 70 years of bank's existence. So we'll give a people who born during this period, we'll give a free account. Like that, sales promotion techniques while communicating to the customers and give some offers. So sales promotion can be immediate or delayed. Right? Now, say for an example, interest upfront, and you can take the interest late. That also sales promotion to some extent. Right, for a shorter period time. So remember, the banks also have some promotional methods. Right, now say for credit card, go today. Now you see, when you go to the credit supermarket, you say every Thursday, Saturday, Friday 10% if you are using this card. These are promotional methods, and through that they try to communicate. The next one, another method is called public relations. The public relations mean, and you need to have a better keep the relationship between your bank with other public groups like press people, with other lobbies, right? If you are not maintain a proper public relationship with different public groups, right? So they come up with bad propaganda. That is why sometimes the bank we call all the media people have a you know will have a party and give some gifts. Why? Then those guys are not put adverse publicity about your bank. So you must have a better relationship with all these different public groups. It's a communication method, right? And publicity. And publicity is, we call them as basically putting an advertisement in the newspaper. It's an unpaid, remember. It is an unpaid. Advertising is a paid. Now, say for an example, I'll tell you a good example. Right? You are going to open a branch. You are going to open a branch. You call some specific character, maybe a politician, or maybe a beauty, maybe a Sanat, or maybe a Mahel or somebody, as a chief guest to open this branch, or maybe president, or maybe prime minister or minister. The moment the minister or prime minister or the president or the key person come to open the account, there are some media people come, and during his speech, he may put something into the public, and then the next day, in the newspaper, this president said or prime minister said, uh, uh, we are going to reduce the lending rate for 2%. Big public advertisement. And say, when he told the stories at the opening of X Bank branch in somewhere, for that you don't want to pay. So you get special free publicity for opening your branch. Right? So that is publicity. So try to get free publicity without paying anything. If you pay, it's advertising. Right? So these are methods, different methods available for you to inform your product and services to your customers. And the sponsorship, right? So a lot of banks are now giving sponsorship packages for person. Now say sometimes we have a cricketers, they're working in that bank, that's all. So they are giving sponsorship packages to them, involving in lot of sponsorships like CSR activities. They display their brand name, logo, things like that. So sponsorship also, you in a one way is you need to communicate. You're used to communicate with your customers, right? Okay. Then you have exhibitions and trade fairs. Now, if you go for house exhibitions, so there are so many stalls available in banks, trade fairs, construction fairs, book exhibitions. Banks are there. Housing loans, banks are established trade stall there, and they are trying to promote their housing loans. People who comes to visit for trade fairs, for constructions, to whoever who build house, architect exhibitions, Banks are there. Why? It's to communicate with the customer. For book exhibitions, book fair in Sri Lanka, there are some banks are there to sell their credit cards, debit cards, open accounts and things. And also you have a promotional literature like leaflets. All these FIDA features, brochures are there. They're just distributing, right? So these are basically communication methods available for a bank, right? So that is what you call the 7 P's promotion. Now we have learned product, price, place, promotion, right? Specific attention to that promotion we have given for digital marketing, right? So we have another 3 elements in the marketing mix. What are these 3 elements in the marketing mix? We call them as extended marketing mix. The first one is you. You as what? And also some, okay, before that I just want to tell you something. There's some integrated marketing communication. That means now I told you there are a lot of communication methods available from advertising, sales, promotions. So banks are using a different methods integrating all these communications. It's called integrated marketing communication. Right? So depend on for your requirement, depend on the banks. So you may use combinations of these channels. That's what you call integrated marketing communication. Okay, right. Now we move into the extended marketing mix element. Extended marketing mix element. That's the first P, we call them as people. That is employee of the organization. Right? It's a marketing mix. Usually refers to as the staff of the organization. The skillness, the knowledge, the attitude, your capabilities about your products, knowledge, services is talk about under people factor. Is a marketing mix variable. So how two banks become different? What is the differentiator? The differentiator is the people, right? From one bank to another bank. So therefore it is important for banks to provide them a better training, to provide a better services to customers. So for that, so they need to recruit the right staff to the bank and provide them a better remunerations and incentive and motivate them. Then only they do their job. Remember holistic marketing approach. First one, internal marketing, right? And to give a better service to the customer, staff must be polite, friendly, attentive, and helpful. That makes the difference from your bank from another bank, right? Okay, so people in the marketing mix therefore play an important role, and that is the human element in the marketing mix, right? They can differentiate your organization with other organization. How the staff or the people can be differentiated through providing service about the products, knowledge about the products, knowledge about the system, knowledge about the competitors' products, deal with them very politely, friendly, attentive, helpful manner. So therefore, people can be a differentiator as far as the quality service aspect, right? Okay, now we move into another one, is the process element. Another element. How can we change this? The classic example. Nothing else. You see the insurance. Now, Sri Lanka Insurance, they are the market leader one time back. Now, Selinco has overtaken the Sri Lanka Insurance. How? They have changed the process element. But they have done it. Now, for an example, earlier, when you made an accident, in order to get the insurance claim, you need to get a police report. And that's a headache for insurance holder. So what Selinco has done it, and they said we don't want a police report to pay your claim. And they come up with a campaign called On the Spot. So they not look at it, the insurance, they not look at the police report. And people see it as these are very, I mean, very, uh, simple thing for them. I mean, it's not going through the cumbersome procedure to go to the police, bring the police guy, show and all. What they have done, they have changed the process element in the marketing mix. Banks are using now. Now, how banks are giving loans within 1 or 2 days? Earlier, banks take 3 months, 1 month, 4 months to give a loan. Now, banks also change their process to give them a loan. Only one guarantor, earlier 3 guarantor, 4 guarantor. Now, another example, 1 day service. If you want to get a passport, you can get it within 1 day. What they have done? Change the process. But the same process will take 3 4 weeks. But you can get the same day, but you have to pay high. Right? So marketers may use the process element or improve the process element, improve the efficiency and the effectiveness of the process elements, and thereby provide a better customer service. So process therefore can be used as a key element in the marketing mix. Example I quoted to you is on the spot insurance. Right? So three major issues with the process. One is efficiency and effectiveness. Right? That's important. And also mechanization rather than automation. We need to automate, mechanize, digitalize now in today's concept. And the fragmentation. That means, so you don't want to divide it, just do by one kind. Those are process. The technology has a great role to play in the developing and improve the process. Now banks, 1 day service, 1 day loans. But they have done the process element. They have changed the process element in the marketing. The last element in the marketing mix is the physical evidence. That is the tangible aspect of marketing mix. Physical evidence means, so once you go to the branch, you see the environment, eye to eye contact, nice environmental, ample parking place, right? Easily available for do forms, accesses, everything. It's a physical evidence. The component refers to the environment in which the service is delivered and make the intangible banking business tangible way. Right? The physical evidence, the things. You don't want to ask from anybody. There is some ample phases are available with the machines. You can do the banking, you can withdraw the money you can deposit your checks, right? And there's a way of in the queue, a call from the number, some banks Please come to counter number 5, and it's also physical evidence. Easily access to the person concerned, right? Parking facilities, all are physical evidence. All are marketing mix evidence. Okay, right. Now, these are the marketing mix element as far as the marketing is concerned. What are these 7 P's? Product, price, promotion, place, people, process, physical evidence. If you can change all these things, why? That is why they call them as a controllable variables. That is why these are called them as controllable variables. Right? So the bank who perform these well, you can compete with your competitor. Right? Clear? Right. Now let's look at it some more. Now you look at it, these 4 pieces and the 7 pieces from the customer's point of view and the bank point of view. These 7 P's, we look at it from customer's point of view as well as the bank point of view. Right? Let's look at it now. How 7 P's we look at from the bank point of view. Product for a bank, how customers look at it. What is the solution or the value he is getting? 7 P's and 7 6. Now products for bank, it is a value for or solution to the customer. Why you buy this product? To fulfill his needs and wants. So the product from the banks need to be provide a solution. 7 P's and 7 C's, we look at from the bank's point of view and the customer's point. Price. Price is income to the bank, but price is cost to the customer. So what customers look at it? So try to reduce the cost. There's a match. Price, bank look at it as an income, but customers look at it as a cost. What is place? Place is looked at by the bank is available, your product, but what customers look at it? The convenience. So that is why banks are using different type of multi-channel methods to deliver your product and services. Why? Customer is always look at convenience. Bank may look at promotion to deal with customers, but from the customer's point of view, all promotional method, it's some sort of a communication. The receiver's end. Promotion is the sender's point of view, that's a bank's. From the customers, the receiver's end. So you need to look at it, how you code and decode in the communication process. To what extent you can convince the customer, to what extent you can communicate the customer. That is why you come up with nice TV commercial, nice advertisement, nice radio jingles and things like that. Because customer, we look at it how it communicated to him. Physical evidence, that is the tangible aspect. And for the customer, that's what they want, confirm. When I go to the bank, I'm ensure that I have a nice environment, nice people, right? And enough car parking facility. I have no problems, easy access to do my job. I need confirmation. So provided physical evidence from the bank will give everything. What customer expecting? A consideration. Take care. So who can give that consideration to the customers? The employees. So that is the people aspect of the market from the banks marketing mix. For customer, what he want is a consideration, is an consideration, right? And a process from the banks. Now take a housing loan. What is the process? So you have to go to the credit department, legal department, like that. There are different departments are involving in the entire process to get a housing loan. But what customer is expecting? I don't mind. I need the coordinations of all these activities. It is your job to put the process in order. So I'm expecting you need to work as a coordination. I need to get the loan. That's what. Go to legal, go to credit, go to some other department. It is the bank's point, right? Now, the last slide talk about how marketing mix look at it by the bank and how the marketing mix look at it by the customer, right? So with this small note, so we will conclude today the financial crisis management. And in the marketing, we have covered almost 50% of the marketing, right? And maybe the next 2 weeks, there are small marketing activities we are going to cover. So I will come on live from 20 and 27th, right? So it's usually time, it's not the recorded version, and this is the recorded version. I have a similar time, another course in IBSL, that is why I have a recorded version here. But from 3rd, 13, now 6, 13, 20, 20th, please actively join with me, and you can ask any questions on that day, right? Take part with me from 1 to 3. I'm actively involved with you, and go through your handouts and go through your recorded version. And if you want to have any questions, and we will do some small balance area about the marketing, something to marketing behavior and planning and things like small area. We will do with some questions, and I will give you a model question paper, right? I will prepare for you to the exam, and there are some questions to be answered which I gave you in past from 2014 to 2019, the balance part, and I'll give you a model question paper, and we'll discuss those things in next 2 weeks, right? So I'll be with you in lively on 20th and 27th. So I will send you a model question paper, and we try to answer that. Okay, so we will see you on again at lively on 20th, and please go through your marketing tools, and that is more than enough for you to pass your exam. Okay, right, see you on next on 20th Sunday. Thank you very much.